Mm. That's
Okay.
I think, a really important decision. Almost every fintech entrepreneur has to make that choice in a
Right.
capital entrepreneurial way. Are you going to sell this to others, or are you going to use it yourself for investing? How did you make that choice?
Uh, so in fact, that's good. So initially, when I came back to present with some of the hedge funds here, some small some, they say, hey, if you think your data is so good, why don't you manage the money?
Hi, everyone, and welcome back to the Quantopian show. Today, we are meeting Anju Marempudi, CEO and founder of Eventvestor, which is billed as the most comprehensive events platform in the industry. Anju was a partner of mine at Quantopian, and his data was super popular with the Quantopian community. So I'm really excited for this conversation. Anju, welcome.
Thank you first. Thanks for inviting me, and nice to meet you here again.
Yeah, it's great to see you. So I want to jump into what I consider like the big question for all entrepreneurs. Why did you start Eventvestor?
Of course, that's the great question, great start for any entrepreneur. I started my career in IT, and I worked with data right from the beginning. I worked data across industries, across functional areas, whether it is financial data, sales and marketing, HR, supply chain, and also across different industries. After doing that for a few years, of course, you always get some takeaways from that. One, we know data was super important. I know in the age of Gen AI and ML, data is the new oil, but it was always the case. A lot of things come from the data. And the second, so we want obviously to see when you're implementing, but this is at the corporate level, and you want to know what decisions people make using the data and what is the outcome of those decisions. And as you can imagine, that's hard. There was no immediate closed loop in the corporate world, particularly in the 90s. I'm talking of 90s and early 2000 timeframe. And additionally, I also found out with the data, obviously the quality of the data is important, the timeliness and completeness. These are all key. These are some of the takeaways, and the decision making is more important for me. That's when I decided, okay, I think I need to get a better handle on how businesses use this data and how they make their decisions. Then I thought, I'm a technology background, so I decided to go to business school.
Oh, interesting.
Yes.
Can we pause there and like, can we linger on the decision to go to business school? Because I'm sure you've talked to many
Right.
engineers who
Right.
have
Right.
been an individual contributor and they love it and they love making things. And then they start maybe managing a small group and they have
Right.
that very classic decision point.
Right.
I think business school is like a really interesting option, which I did not take myself, but I'd love to hear like you're thinking about that before we go
Sure.
on with
No,
your story about data.
no, no, absolutely. So because I got the opportunity to work with the data and building business intelligence platforms, KPI dashboards, so I had an opportunity to interact with the business more.
Okay.
And at the same time, being from the technology, you always feel that you are handicapped, and you don't know exactly how they are going to use this data and what these KPIs mean and what is the outcome of this and how do we know this is even successful what I'm building. And that's when I thought I want to know a little bit more, and that's the reason why obviously it was already like 10 years into my career. I thought it makes sense to go for an executive MBA,
Can I ask,
that's
did you
a
feel
full-time
like,
MBA.
yep.
So
Did you feel like you wanted to know because was it like curiosity that was propelling you? Or is it more you wanted to know because you wanted to have like a little bit more control and agency over the business where you're operating?
yes, that's the second part. I want to have a little bit more agency and control and obviously see how I can contribute more towards this. Of course, at that time I was not thinking of building something on my own, but at the same time I want to have that agency and control on what we are building, how we can make these things better as we
I, I think that's like a really common, important like trait for entrepreneurs.
yeah.
Like, where does that come from? Why do you feel that way?
I think that may be true right from the beginning where I started in India, and always that was at Inquisitive, and even in the engineering college where I studied, and then I started my first job at TCS, which as you know is global, one of the largest companies right now. And you always want to know to the end to end, not just, hey, I'm just an IT guy, I build a system, it's up to the business to figure out. And when you have that full visibility, I think that's where, as you said, entrepreneurs, that's when you realize there are gaps. Obviously, you will see gaps because when you say end to end, you will see the gaps. And that's when you think, this is a gap, maybe that's interesting to me. Can I do something here?
And do you think that way of thinking was intrinsic to you or unique to you, or was that what was happening for a lot of people around you? Like, is that?
I would say a lot of people probably, again, a lot of people around me, not many took the same decision I did.
Right.
So it probably a combination of different factors, and each one comes with a different drive and a different perspective on how you want to see the things, and more importantly, where you want to contribute and with some control and agency in that.
Right. Yeah.
One thing I
love
realized
what you said about finding a gap, but also a gap that you feel you can fill. That's
exactly.
Mine actually was just giving me that same advice.
Exactly. And fortunately, by that time, I worked with some of the biggest companies and the biggest industries. I started with TCS. I worked at IBM in the Middle East for 3 years, where I had an opportunity to travel to the entire Middle East, Europe, US. I got exposed to the biggest customers that IBM works with. I came to US, then I joined KPMG. Then I had an opportunity to work with some of the management big customers. Then I joined a startup, Epiphany, which was at that time probably the leading machine learning platform for marketing automation.
And when was that?
That was in 2000.
Okay.
It was 2000, just before, and then like everybody else, you all become millionaires before it goes down.
Yeah.
So and because that time that was the leading marketing automation. If you remember Epiphany, there was no marketing automation. Like Civil was there, but more on the analytics side.
Yeah.
But this was the one with PhDs from Stanford, implemented data mining, we used to call, not so much machine learning those days. But still, it is the neural networks. You might call data mining, but you call still neural networks and different models. I joined them. So I got a broad exposure. And obviously that happens because you choose that. I could have stayed with one company and put my career. The reason it happened that's my choice, because I do want to get exposure. I want to know more about these things. Obviously, when you know more, and that's when you will see, hey, everything is okay, or like what we talked about, right? And what can I do?
Yep.
And that's when, and with all this, that's when I decided, I need to know a little bit more on the business side, because that's where you can make the impact, even with technology.
And was this before or after Epiphany? Like you went to Epiphany and then business?
After Epiphany. After Epiphany, KPMG, then Epiphany. After Epiphany, luckily I got into Wharton as an executive MBA. And then the idea for this is interesting. So as mentioned to you earlier, right, we build these business intelligence platforms, dashboards, KPIs, but we don't know what patients they take and what is the outcome. And I was in this leadership class, the very first class, the professor comes and puts first slide. IBM appointed Lou Gerstner as CEO. The stock added 5 billion to the market cap. One decision. Next slide, 3M. They changed their CEO, the stock added X billions to the market cap. Third slide, another CEO resigned and the stock lost billions. 3 slides. His goal was to see how important leadership is. But my takeaway from that was coming from the data, looking for that closer loop. Here I said, this is a decision a management made, and you have immediate reaction. You know what happened to that reaction. Company announced that we changed the CEO, and the market reacted, and within seconds how good, how bad, with quantity, quantifiable outcome. And so I was thinking about putting to my data background and these into perspective. I have been thinking about this, what can be done. And obviously, being worked with data, I know data is super critical. Unless you have the data, you cannot build an automated system. And I was always looking, these things you cannot manually do. You need to find a way to automate it. And thinking
Can you
over
say a little
that,
bit more about that? Like, why is the automation so essential?
because of the scale with which it is involved. And as a human, I think, we can only think of finite number of combinations, and, you may have a lot of data, but manually you can think of, okay, these possibilities, this is my hypothesis, let me use the data. But when you automate, your possibilities become infinite. And the more data points you have, the more combinations you will have. So you will be able to come up with more options that you have not even thought of, right? And for that, I realized, data is key. So then I joined another management company from my MBA, but always thinking about this.
Interesting.
And within 2 years after I left my business school, so the bug started. You know what? I need to do something here. So I left the job and started, and I was very clear what I want. Then obviously with my MBA background, now I know more what all things companies do, what filings they do, what press releases and earnings calls and everything. Then I said, there are so many things companies do. Everything is announced, they're timely, and the market reacts to them. But if you want to do that, is that data structured enough? Because I was coming from the world of data marts, dimensions, facts, and those things. That means for me, everything needs to be in cells and where you can automate that process. The decision making can be automated. And I did some research. There are obviously some data is available, but not as structured as I would like to see. And I took the plunge and I said, okay, let me start building this. So I even moved to India for 1 year when I started the business, because I know it's going to be manual intensive, so that's the only phase in this data pipeline, manual process involved, then everything can else be automated. So I will handle the manual part so that the downstream or everybody else can automate, no manual processing.
Can you talk more about your decision to move back to India for that first year?
So, because I realized that, to build this, I need to be, because I need to first train the people. I started with MBAs again there in India, and I want to be close to them. I know I'm not going to spend much time in selling the product because I don't have it. So I need to spend at least some time to build it. And the only way I can do that is to be close there. So that's when I moved to India and set up an office in Hyderabad and hired people and started building the data. And the first product we built was like an earnings dashboard, where you identify the key earnings guidances, buybacks, dividends, and how you can make decisions. And then within 6 months, 7 months, we have good amount of data to do some research, and we want to do event studies. Obviously, pre-event, post-event, how is the drift, how much equilibrium takes. So we worked with some professors in India, and we started building event studies. And we were surprised to see there was clear things, where the event is announced, you see a big reaction over, whether it's a positive or a negative, you see overreaction, and then it goes down. But of course, the question is, how do you make money out of it? We said, we are not going to do that. Let the experts deal with that.
That's I think a really important decision. Almost every fintech entrepreneur has to make that choice in capital entrepreneurial way. Are you going to sell this to others, or are you going to use it yourself for investing? How did you make that choice?
So in fact, that's good. So initially, when I came back to present with some of the hedge funds here, some they say, hey, if you think your data is so good, why don't you manage the money?
Yeah.
I'm sure you got the.
I feel like they feel very clever when they ask that question. That's their favorite question.
Yes. So I decided, now I'm building the data. You need to manage, you need to get the scale, you need to get the resources. I have to choose one. This is what I know, this is what under my control. I'm not an expert in investing and those models and raising the money. That's not the area I want to go. If I do, I can do with the little thing I have, but it won't be scalable. Whereas if I can build this and give it to all the biggest funds, then the scale is high. It is probably the classic case of giving the tools, selling the tools. When there is something popular like gold popular in Silicon Valley, those who pull the tools like making definitive. They may not be finding the gold, but at least they have a consistent business.
Yeah. Yeah.
Right. So we were very conscious from that time onwards. As I said initially, we thought we'll build some models at least to demonstrate.
Okay.
And increasingly, as we talk to the hedge funds, the moment I show an event study or anything, yeah, you can skip that. That's what we do. That's why we hire the people for. And we want you to get us the best data, highest quality, complete, and timely.
Mm.
That has been the message consistently. And we, so that's what we kept focusing on.
Anju, can you tell me a little bit about and share with the whole audience? You in your career, you mentioned you started with corporate customers, so like just general corporate, and then now, if I understand correctly, like you're very specialized, right? You're serving asset managers of all different kinds,
right?
And can you just talk to us about what the differences are, what it was like to transition, and especially like what you like about selling to asset managers?
Okay, good. So in the corporate world, obviously that was some time back, and most of them were big corporations where we worked with. And as you know, things don't move quickly. Any project, particularly in those days, there was no agile, it's all waterfall method. And any project you plan for 6 months, 1 year, 1.5 years, and by the time you are done, half the people, both on the business side and IT side, are no more there. So it's difficult. But at the same time, there are some situations where you really feel that the business is very responsive and they appreciate what you do and you have a good team. So we had some good experiences, those cases. But in general, it's a long cycle time and you don't have a feedback loop and you don't know what you build. So you tend to build something and move on and you never know even what happened, right? Come to the asset management, we primarily work with the largest hedge funds. But I think it's not by choice because that's how we are structured. Because if you have the best quant researchers and the best technology infrastructure platform, you will be able to incorporate this kind of high quantitative data. We have 50 data sets now, right? And thousands of data points. And obviously, the first, we started working with the biggest, and we are still probably, at most of the biggest companies and slowly moving to the lower as they build their resources. And here, as you know, sometimes it's pretty quick. We give 50 data sets. Some of our customers, within few weeks, they evaluate and come back. Obviously, nobody's going to say, hey, this is great and we'll buy. Hey, we do find some alpha. Maybe we want to subscribe to this. And things happen pretty quickly. And the moment we are also, because I have the technology background also, we are very streamlined in terms of how I set up the process onboarding. Sometimes, usually, you sign a contract in the morning, by next day, your data is up and ready for you to start using it.
How do you deliver the data these days?
Majority is still SFTP.
Okay.
There are few that use APIs, but majority of the customers use SFTP. I think that's more easy probably for most of the people, unless you're building an online platform where you need real-time access for API. In these cases, some of our customers take data once a day, some take like 3 times a day, and we have some customers who even take like every 15 minutes. But everything is mostly through SFTP. But there are some in the API that use.
I think another question that comes up a lot for entrepreneurs is, you had your first product, which I'm assuming was like a hit product, right? Because that's like kind of the key. You gotta got to get one to work at first. But you mentioned you have all these other data sets now. Thinking about that expansion and getting past like the first sort of like hit product.
Right.
How did you do that? How did you come up with the other data sets that you're selling now?
Sure. So initially we started with, as I said, right, earnings guidance by back the standard, and started with S&P 500, then expand to Russell 1000, and then expand. And obviously, a lot of it initially, because we didn't have much feedback from the industry initially. And this is where I think, even today, I keep giving a lot of credit to Quantopian, and I have probably the greatest gratitude for Quantopian, because when we were ready to start getting with hedge funds, Quantopian came into the world 2014-15 timeframe. And I remember talking to your team, Josh, and others, and they were looking for data. You didn't have even data store at that time. We were talking, hey, I have this, like by that time, I think we worked with 25 data sets. Have all this data, and we showed these event studies. And I think your team said, okay, you know what, this is great. I think we can all make some of them standard available to our users. And that's when started building on the Quantopian data store. And initially, I think the largest number of data sets from Eventvestor and Quantopian.
Yep, definitely. Yeah, and it's funny, like that turning point was big for Quantopian also, because it got us started on the path we probably should have been on from the beginning, which is just getting this data to our community.
Right.
Very, very like potent effect for people doing their own work and also making things for the fund. So that was a great moment.
No, absolutely. So that was just the timing wise, worked perfectly, and that's the time. By the time we signed up few of the large quant hedge funds, and then slowly we get more visibility. And I think I remember presenting at your first QuantCon conference in New York.
Yep.
So definitely our initial exposure to the market is through Quantopian platform. I'm proud to say that, and thank you for that opportunity too.
I'm so happy. I love this story, and this whole process of like looking back on Quantopian has been really like enlightening, but also a lot of fun, because there's so many sort of like external benefits that I didn't know about, and this is a great example.
No, yeah, definitely. I do tell people in the industry in general, even on the customer side, always about the Quantopian. So yeah, definitely that's a good experience. And then slowly we start building, but it's a slow process. As I said, the key we noticed is it's not enough that we push. We need to make sure the client is ready. So
what do you mean by that?
So what I mean by that is we usually look for, do they have enough quant researchers, quant traders, and the right infrastructure? Because as I said, even though any discretionary fundamental, we have some customers, but those are, even in choosing this is very discretionary, because they think they have other choices. So why should they even go into Eventvestor, right? Whereas when you are a Quantopian, the comprehensiveness, the detailed nature, how many additional factors you can generate from your investor data. And not even a question, anytime there's a lot of quant team and they realize, they will jump onto Eventvestor. And so because of that, we started working with, so we want to make sure, even if before we spend time, hey, do they have the right team in place? Otherwise, we have seen that we might do trials, we might do discussions, but it doesn't really translate into license.
That's such a hard lesson, because I think when you start a business, you want customers so badly.
Right.
Any prospect or any lead, you like you said, you want to push on it, and qualifying your leads is really essential, because you only have so much energy, right, to make
yes, absolutely. And the good side of that is, even though it is a slow process, that means it's organic. We need to wait for the industry to evolve. We cannot push. But the good part is, unlike usually you start working with the smaller customers, mid-size up.
Yeah.
We did the reverse.
Yeah.
We did with the biggest, then the next level, then the next level.
That is really interesting. And as you're coming down in scale,
Mhm.
is it still all quant? Like, is every firm a
I
quantitative
think
firm or
still 80 to 90% of our customers are the quants.
interesting?
Give you like
I wonder if
quants.
you know this. I don't know. I wonder one what the formation rate is like for new funds right now, because there are different periods of time where the formation rate for hedge funds is very high, and
Correct.
like that's when you want to be starting a company. Or actually, you want to
Right.
have you want to be like when you're in where you've got your product because newly formed funds have to buy everything. There's nothing to displace. They
Correct.
want to move really quickly, and so it's like they're great customers.
Okay.
So I wonder what the formation rate is like right now. And I also wonder like what share of newly formed funds are quantitative. I don't know if you
Yeah. So I think more and more, I think two aspects from what you asked for. More and more, what we notice is newly formed companies. There are some who started purely quant, and we have worked with them, some of them, even before they start.
yeah
They give a heads up, hey, Anju, we are preparing for that, launching is building our team.
yeah
And so we want to look at and because we know that these are the teams, and in some cases they have used our data earlier also. They're familiar, and it's easy to get onto them. And if it is a smaller, usually they will be very selective. So we did work with them. If they are too small, like a few hundred millions is too small, as in hedge fund world, it's difficult to get the launch because usually there are one or two people working on it, and they have only limited scope or opportunity that they can work on, and they want to make sure they will work on what they are
yeah
comfortable with.
yeah
But where we see opportunity is the big launches, as the big, and most of them, as you could see the transition now, you see more and more becoming multi-strategy.
yeah
Even the big launches, I think the one coming up.
like at launch their multi-strategy. Yeah.
Yeah, so big multi-strategy firms. And the other interesting thing we do notice, John, is the existing funds, which are discretionary fundamental, more and more are adding quantitative
Yeah, I
team.
wanted to ask about that because that's like that's been like a latent trend
Yes,
for forever, probably for your whole career, right? People have been talking about that transition. So is it finally happening?
it is
Or
happening. We do
yeah,
see some funds, probably 3, 4 years ago, they have zero quants.
yep.
Now you see some of them having 10, 20, 30 quants
Oh
joining
wow,
teams.
that's awesome. And why do you think that's happening now?
I think two things. Obviously, one is the wide variety of data available. Previously, you work with your trading data, then you have earnings, and then few other data. Now you have, as you know, the alternative data. You have thousands of data sets available.
Yeah,
It's difficult to process all that in a manual discretionary approach. How do you account for all that,
hmm
right? That's one aspect. And second, there are firms, obviously, in the trading wise, they may be still discretionary, but they are incorporating a lot of quantitative inputs. They have quant researchers probably doing quantitative, then generating the signals or decisions from it, and then incorporating them into the manual process,
hmm hmm
discussion process. So,
yeah.
so that's why we see, and if you notice, even the growth among the hedge funds is probably the highest if you are a multi-strategy.
Okay.
And obviously there are some of the very big fundamental only firms. They think, hey, we need to move, we need to add this quantitative aspect. And if once they make the decision, it's not difficult because they can track the talent. And also over the years, the number of quant researchers, quant traders has expanded, I think, probably in the last 7, 8 years. Previously, you do have them more arbitrage systematic, but I think it expanded significantly over the last 6, 7 years.
Yeah, it's interesting that sounds like you think one of the root causes is alternative data, which is really interesting. You think it's because that data's got so much signal, it's like you have to incorporate it?
I think one is signal. Obviously, others also want to see what they can see, because I know that some alternative data comes and goes. The you lose that alpha decay is pretty quick.
Yeah.
because once everybody knows those are just no more see the value, but there are some alternate data, no matter what, it depends on how you use it rather than just having the access. And that's where we think something like Eventvestor's events data, everybody knows, everybody has access. But the question is, do you have access to the right data in a timely quality data? And then how you can overlay this on any strategy you have, whether you have a or startup, whether you are using alternative data, whatever model.
Yeah.
Because the events provide context. Companies operate under events. Anything that happens to the company, event is the context. And any external input analysis trading you put in, but if you overlay events data on top of it, you obviously know you will see that there's a better signal you can generate by overlaying this rather than excluding that.
Right.
And so that's why I think there are multiple types, but customers realize, hey, we do, there is definitely value we can generate by incorporating, but customers are also probably going to be very selective in terms of what alternate data they want to use, because some have even privacy issues. Obviously, people need to be extremely careful with that.
Yeah.
The second is reliability. We get this, but how long is it reliable? Is it sustainable?
Right.
So multiple
Breadth, right? A lot of alternative data has pretty narrow coverage.
Right. Absolutely. That's the reason why initially we started saying, it's like Eventvestor is like a first order alternative data rather than just alternative data, because this is primary still. It's supposed to be in the fundamental, but not traditionally used the way now it is being used.
Anju, do you still code?
To some extent.
Yeah.
To some extent, SQL is my favorite. Like I started doing from my year one of thing. I still do it. So I use that to make sure very quick, broad. Most of the times, anything I do, it's more in terms of validating the data quality, because I know that is supreme. And that's something I used to do even when I was running IT projects very quick, because I have the broad understanding about on the business context side and the data and the language. So the only language I've been using is SQL. And I still do that because that gives me much more comfort. No matter what, so even in my call with my team, I quickly open SQL Workbench and show them, hey, what these gaps? There is some delay in the events data that we capture here. We need to reduce further. We missed few events here. So and that gives me comfort, and also the team also feels that hey, we have these multiple checks, so we need to be on top of the game.
Yeah. It's kind of amazing to have visibility all the way down to like the core of the business, right?
Yeah, absolutely.
And so one of the things I'm curious about, both for your customers and also for your own company, is with GenAI. The last like couple of months, I've been having a lot of fun playing with ChatGPT, and I've recently been doing a lot of like coding for fun at night with Replit, which is got really good integration with like AI Suggest, and I think it's I haven't tried GitHub Copilot yet. That's the other one that I'm excited to try. And I'm just curious, like what, again, a really like big, broad level, what do you think is going to happen for like a data business as Gen AI matures? And do you think it's going to change your production process? Do you think it will change the way you market, or is it irrelevant? And so maybe we can talk about your business first, and then I'd love to, talk about your customer business and what you see.
Sure. So I think it's absolutely, fabulous, the kind of technology, the features it is giving in general. Of course, it's much better already in terms of general use cases, particularly when you're writing something, that's a huge help. And from a data production point of view, we have been always looking at what are the technologies coming, where somebody is going to arbitrage this and automate the whole process. We have been doing this since the beginning. Anybody can automate everything we are doing. If then we need to be the first ones doing that.
Yeah.
and what are the areas. So we kept on adding different levers in terms of where we can automate, in terms of event detection, making sure we don't miss any key events, what degree we can use technology versus human, because it's still a good amount of human because of the granularity with which we get the data, and everything we produce is also kind of a golden record. You don't want counts, you don't want, hey, it happened, but you want to make sure this is the first time this news was announced. And these are the 10 data points in that. We need to get that granular.
Yeah.
So right from natural language processing and NLP we started, and now generative AI, what we are looking at is how can we increase this process? Both, and we see two areas, but in terms of, are we missing any key events in the data? Because we look at press releases, all SEC filings, transcripts, everything. Can generative AI help us to make sure, we are not missing anything? Second, can it also help us by combining certain things, the new event categories also, some pattern identifying, and even though they are low latency or low sparsity, but critical events, because some of our customers, particularly on the options and market making side, you don't need high sparsity, but any critical event is super important. So can it help us to identify those critical events that are missing in a standard pattern? So we started looking into this in terms of how it can help.
Anju, can I ask this is a little bit of a into the weeds, but you said high sparsity and low sparsity, and I can't figure out which way the dimension goes. What do you mean by high sparsity?
So what I mean by is, normally if you're building a quant model events, you want to make sure that there are a large number of events.
Yeah.
Right. If you do a buyback authorizations, like you get probably 5,000-6,000 events a year. Yep. Guidance events, you get like 20,000 events a year.
Yep.
That's a high sparsity. But I have low, if I only have 3-4 events in a month.
Yeah.
And from a quant perspective, you may not see much value because the volume is not there.
Okay.
But if you are a market maker and options, every event is important because they have a combination of events.
Okay.
So they can incorporate those better versus if you are a quant. Again, in general, of course, there are always exceptions. People can incorporate everything depending on what you do, but the value add could be less. Whereas, for example, some other events that don't happen quite often, but they have the impact is quite high.
Right.
So when you're a market maker or an options or even discretionary, you want to know when those things happen.
Right. I guess the businesses where they're trading volatility, sparse events can be super important because they can
absolutely sparse. That's the reason why it depends on the use cases,
right?
On how you want to use that.
But if you're like a star player where you're trying to identify patterns and exploit them, those are almost like signals that you should not be in that security or something, right?
Right.
I want to say, well, it's not fun to write quant strategies for biotech companies heading into FDA approval.
No, exactly. So we do, as you know, we do have biotech events, FDA clinical trials, PDUFA dates, and all.
Oh, really?
Yeah.
Very cool.
Yeah, we do. But the use cases are different, and we do have some customers only subscribe to biotech events, biopharma we call them, and only that because that's their specialization. They focus.
How many like industry specific measures like that or data sets do you have like that? Is biotech unique, or?
I think the biotech is the most unique, and the next you have is the retail, like same store sales.
Yeah.
And that's the very unique.
Oil and gas too, like rig counts and those types.
So we do track business operational metrics across various industries. For example, like assets under management, or like automobiles, like volume of vehicles production. They use, because a lot of them used to do monthly, and which is super valuable. Now majority are moving into quarterly.
Moving slower.
Slower because they don't want to release too often. But retail, for example, when we started fast, there were like 60 or 70 companies that report monthly same store sales.
Yeah.
Now it is under 10 that report monthly.
What's your take on that? Like, is that good? I don't know.
Market obviously would love to see more data coming from
Yeah,
the companies, but companies realize, what are we getting from this? Is it under stress for us? Is it helping? Because they want to see how is it helping us as a company.
right.
And the more often you release, the more often you need to pay attention to that, and all your team needs to work. But what is the outcome? Is it really affecting our? And also, maybe their capacity to predict is also less. And if
On a
you
monthly
cannot
basis.
predict, and if you know, and the variability is also high, the market looks for consistent outperformance month to month to month when you're doing monthly. And when you don't have that, you don't know what volatile to expect. So if you're an IR person or a CFO, you don't want to see too much volatility because you're releasing data unnecessarily more frequently.
Right. Do you think, is there anyone going the other way? Like making it, because if you think of like stock price, right, that's updating tick by tick all day, real time.
Right.
And people get used to it and they ignore, a lot of investors ignore the short-term moves and stuff like that. It's not as big a deal if a company's got volatility in its price. So I wonder, like, what if people were sending out like real-time updates on their business metrics with that? What do you think would happen?
I think the main reason probably business may not do is once you give something to the market, you have to keep giving it. The once you start giving and stop, market will take, that's a signal.
Yeah.
Right? Same thing happens. That's the reason why companies try to do more buybacks versus dividends, because once you do dividend, market expects increasing cruising pace.
Yeah.
And the moment you stop, even if you reduce your growth, market takes that as a negative signal.
Mm-hmm.
With buybacks, you have more flexibility. That's not the case.
Mm-hmm.
Same thing happens with guidance, for example. Once you start giving guidance, market expects. The moment you stop, they think, oh, you are not certain what's going to happen with the business.
Yeah.
So
That's
unless you
interesting.
come to that stage where you have some comfort and confidence level, certain things probably companies don't want to. Because I see that, because before working with the quants, we worked quite a bit with IRs, investor relations, because that's when we were providing the data, Eventvestor data first. And we partnered with New York Stock Exchange and providing our data to most of the listed companies through New York Stock Exchange. So that's why we see some perspective from their side.
Got it.
And that has been super helpful for us. Having that initially before coming onto the pure quant side also has been super valuable.
Yeah, it actually it's counterintuitive to me, but I'm realizing it's like I just don't really know enough of people in like IR to understand like what it's like for them to have to release the data.
Right.
Because sort of like most people, I think the part that I focus on is the most important, right? So I was like, oh, more data be better. They should release it more frequently. But obviously, as you're explaining, it's a high price for them in terms of like focus and
yes, it is just that, because that's where the IR professional's primary job. And we used to do, because sometimes they want to know before making a decision, because we used to do studies for companies at that time. If they have to make any changes to their guidance, or suppose they had to cut dividend, they want to know what happens, how bad it's going to be.
Mm.
So we used to do some studies. Hey, in your size companies, these are 20 companies that announced dividend reduction or cut, and this is what happened in the market in the short term. Same thing with any decision they make. So sometimes they do have to think quite a bit, and sometimes what happens, because their primary goal is obviously to make sure it doesn't turn off their shareholders.
Right. Super interesting. There's like a whole 3D chess tournament playing out for what information to release.
No, absolutely.
It's got to mean something for quant too, that the frequency is slowing down. Like one thought is like, okay, there's got to be some information arbitrage in the market now, because the market was getting things on a monthly and now it's getting it on quarterly.
Correct.
So how do you predict the quarterly event, right?
And the reason is this is a small sample because retail of all the companies, for example, we track right now probably about 5,000 companies in the US,
Mm-hmm.
including SPACs.
Mm-hmm.
And the number of companies that report monthly or seasonally metrics is small. And that's where probably, I don't know. Obviously, we cannot say, but a lot of quants may be even ignoring that, because that's not a factor we can model for.
Yep. Yep.
Whereas if you are a discretionary or others, those are important. If you're a market maker, those are important. Every nuance is important.
Yep.
Because some companies announce holiday sales, but they don't announce anything. Some companies announce seasonal. For example, there are some companies who only announce during the seasonal. Ski resorts, for example, they announce during the skiing season,
Mm-hmm.
right? And others time they are quiet. They don't do that. But for that company, that number is super critical. But quants, I don't know again, how many really factor in those kind of things.
Right. Yep. Are you only covering US companies, or have you started to cover international equities?
Yeah, good segue. So we were initially focused to US. We wanted to make sure we are very comprehensive, both in terms of the universe and the type of events. But we did, and we have seen sometimes customers ask us, hey, when am I going to get Eventvestor for Europe, Eventvestor for Asia Pac?
Yeah.
So we did some pilots in Europe, but ultimately we went ahead and released a product for Japan and India recently, because that's where we see more, as you could see now, more and more investors from Europe and US are going into Japan, is now kind of coming back. And India has become a big destination. A lot of funds from here are even setting up offices in India.
Yeah.
So those are the
there's
two
a lot
markets.
happening in India in the markets right now.
Yeah.
I think Zerodha is incredible. Tons of startups. I hear from so many quant startups in India, fintech startups in India. It's like
No,
probably percent of the
you have probably like 100 unicorns, fintech unicorns in India now.
yeah.
And as you said, Zerodha, I think they just released a report is this week. The options trading in India is skyrocketing.
Yeah. It's been hard to access until recently, right? So
Until recently, right now it is huge, and options and futures, particularly from the retail side, more than in the US. I think 50 to 60% from the retail side they are getting into this. So there's a lot of interest, obviously, and particularly what we see in the future next 5 to 10 years. That's when I said, because we cannot scale indefinitely, because we have a scale up, it's not like completely automated. So we have to choose based on the market requirements, market trends, and the customer. So we released Japan, we released India, and we are still working on enhancing those two, and also started working in South Korea. So those are the markets slowly we are expanding.
Yeah, that makes a lot of sense. Who are the buyers of the international data? Like for the Indian markets, is it US hedge funds that are trading in India now?
Yes.
Okay.
Yeah. Still, so we haven't sold yet to pure India-based hedge funds,
Like Indian hedge funds.
but it's mostly these European and US-based large fund funds.
Okay.
Are
And
trading.
probably the Middle East too. You must have some big customers in the Middle East doing.
Right.
Why do you think that is? Why isn't there like a domestic hedge fund industry in India? Yeah.
I think it is coming. I do see few quant firms now, and now that US quant funds started using people based in India. And I think that's how the knowledge spreads, and that's how the industry comes. And those are the people who come out and start their own quant funds. And I think that's what we will see.
Like they have all the things that you want, right? It's growing. It's had a really strong trend for the last year. There's tons of retail trading. It sounds like a great quant opportunity.
Absolutely. That's why I think we will see in the next coming years more and more quant, both domestic and international.
Yeah.
International, whether you're a quant, traditional, anyone, everybody is looking to have a foothold in Indian market now.
Yeah, for sure.
And
there's also like a really strong home country bias for Indian retail investors. Like a lot of the world, people want to buy U.S. equities. It's like the market they want to trade in.
Right.
And it's like a pretty strong phenomenon that in India people want to buy on the local market. It's local equities, local companies.
Right, absolutely.
Yeah, it's super interesting.
And the number of companies is also pretty high in India. Like here,
Yeah.
you have 4,000-5,000 companies, high liquidity.
Yep.
So definitely a good ground for the quants.
Yep.
And I'm sure it's coming.
Yeah. How much have the number of listings grown over the last like 5 years? Is it like doubled in the last 5 years or?
In India,
Yeah.
I'm not exactly sure, but definitely keep. But it did slow on like the rest of the world in the last year and a half.
Mm.
I think fewer, but before that, definitely a lot of companies came public.
Yeah. Super, super exciting. That's like there's so many things about finance that are cool, but the development of like local markets, I think, is super interesting.
Yes,
And like the retail preferences, and then how these markets mature as they get more listings and more liquidity and more participants.
correct.
It's gonna be fun to watch what happens
Yeah,
for all the markets eventually.
definitely. I think, yeah,
From
we're
seeds,
looking
all
for
of things.
lot of changes,
Yeah.
developments.
What about Japan? What's happening in Japan, do you think, that's driving interest there?
I think with Japan, we do see from the macro perspective, I'm not very clear, but definitely, more and more. Probably what's happening in China is also impacting Japan to some extent
Yeah.
because there's not much people are willing to go there. Maybe that's the reason why also looking at Japan as an alternative market.
Okay.
But definitely more interest from the investors to go and invest into Japan.
Just to shift topics a little bit, you've talked a lot about your customers, and the feeling I get is like these customers so well.
Right.
How do you connect to them, and like what's like your favorite way to connect with your customers?
Yeah. So because we work with a small group of customers, these are all big firms, and
Yeah.
absolutely I know them very well, and we do our due diligence very well at the individual level.
Yep.
And in terms of reaching out to the customers, we go to the conferences, at least 3-4 conferences every year.
Okay.
And I speak at least at 2 or 3 conferences every year on a panel or sometimes solo, and we try to do an exhibit at 1 or 2 events, and that has been the primary. But majority of the cases, our successful customer converts is where they reach out to us directly. A lot of inbound interest.
Yeah.
Sometimes they will also this come from big companies. They'll say, "Hey, it's hard to find you guys. We don't see you much, but glad I'm able to get in touch with you."
Yeah. Yeah.
And once we start, we'll figure out in the first meeting, how far it will go, whether it will translate into a trial, and then make that connection.
So Anju, I have one more question for you, which is another kind of open-ended one.
Mm-hmm.
I heard this great interview with Stanley Druckenmiller, and one of the questions was like, can you explain your investment process?
Right.
And his explanation was awesome because it was easy to understand, but you can appreciate like how hard it would be
Right.
to do it well. And the way he explained it was, I think about the world and how it will be in 18 months.
Right.
And then I think about which companies will benefit and thrive in
Mm-hmm.
that future world, and I buy stock in those companies. So it's like beautifully simple
Right.
to say, and then very, very difficult to do because thinking about the world in 18 months is not easy.
Right.
But I'd love to hear what you think is going to happen, in the world in the next 18 months. And where you think which companies you think might benefit from that.
Yeah. So whether it is 18 months, 3 years from now, and obviously, I keep thinking in terms of what's going to happen to this quant and data-driven investing. I'm looking for, and my expectation is it's going to be more and more quant research, quant-driven systematic trading. And as I discussed earlier, I do expect many of the existing fundamental only discretionary, or we don't hear much these days, but the quantamental. It's a
Yeah.
combination of quant and fundamental. We do see that transition increasing, and more firms going that route and trying to invest. But it's not just those funds that will also impact other investors. When there's more of your trading, already more than 50% is quant systematic trading, and significant more of that is happening through systematic, I'm sure that will impact the market dynamics. The price discovery itself will be disturbed. It's no more going to be, so these are the dynamics where it becomes increasingly more and more you need to use more technology, and that's where probably people are already looking at how you can use LLM models in terms of doing this. I was at a conference in London last month. That's the first time I heard not an LLM, like SLM, small language models.
Oh, yeah.
Yeah, right. For investing, how you customize them into small and combining this LLM learnings and SLM. I think that's where it's going to go. And I'm optimistic and happy that way because, again, whatever approach you take, data is still going to be the key.
Very true.
Because, everything can be commoditized, the chips, the models, and everything in key, but you get the best experts in the world, the best technology, best tools, but without the right data at the right time, they can't produce a signal.
Anju, this was a really fun conversation. I feel like I learned so much. I'm really, really impressed with the way that you've developed your business, and thank you so much for being here.
Thanks, Faz. Really, great speaking with you. And thank you again.